the ultimate destination for smart investing. Welcome to Invest Ideas, where we turn your financial dreams into reality. Subscribe now and join us on the path to financial freedom. Hey there, what's up guys? I am so excited to be talking about what could potentially be a once-in-a-generation opportunity to build wealth. That's right, you heard me correctly. If you know what you're doing, it could be one of the easiest times to increase your net worth dramatically. You see, there's a popular saying that riches are made in recessions, and it doesn't take much to realize that we're already beginning to move towards that point. Just take a look at the headlines today. More than 9 out of 10 CEOs are bracing for a recession, 97% of CFOs are cutting costs by 10%, and JP Morgan warns the stock market could fall by another easy 20% from current levels. Now, even though this sounds negative, the fact is that recessions happen on a regular basis, and if used correctly, it's possible to set yourself up for the rest of your life through some incredible opportunities and discounts. Even Warren Buffett has been quoted as saying that bad news is an investor's best friend. So, let's talk about exactly what's expected to happen throughout the next 12 to 24 months, the best benefits that you would be able to take advantage of today, and precisely what you can do to make sure you're in the best position to make as much money as possible. But before we dive into all that, let's talk about what a recession actually is. Generally, recessions are accompanied by a significant rise in unemployment, a drop in wages, a loss in consumer confidence, and a decline in values across everything from stocks, food, energy, and services, with sometimes long-lasting effects throughout the entire world. Along with the recession usually comes a decline in earnings. Every quarter, companies report their revenue and give guidance on their future outlook, but lately, they've been cutting forecasts, bracing for slow or even negative growth, citing recession risks at the highest pace in 10 years. That leads us to layoffs. When consumers earn less, they spend less, and when companies see less demand, they begin to scale back on their expenses, usually starting with employees being the first to get let go. In fact, just a quick Google search for mass layoffs shows you dozens upon dozens of companies who are trimming their workforce. According to Bank of America, the U.S. economy will soon start losing 175,000 jobs per month. So, what does all this mean for you and your investments, as well as how you can use this information to make money? Let's start with number 1, stocks. As of now, all 3 major indexes are down between 20 and 30%, with analysts like JP Morgan who believe that we have another 20% to go from current levels. However, if we take a look throughout history, since 1946, the average bear market drop was close to 30%, with the most severe having been in 2009 when the S&P 500 fell 57% from the peak. Once you combine the average with the recession, bear markets tend to do even worse, with an average drop of 34.8%, which, just for reference, right now we're down about 25%. All of that is to say that generally, the absolute bottom occurs when we see capitulation across investors. Usually, that's a time of the start of the recovery, and things begin to bounce back. I'll cover exactly how much you can make from this in the next few minutes, but first, we have to talk about number 2, real estate. Even though every area is different, and some locations might continue to flourish, housing declines on a national level are actually incredibly rare. In fact, during the 2008 financial crisis, only 1 in 10 markets experienced a decline in housing prices. However, with the current pandemic and economic downturn, some experts are predicting a different outcome. While it's difficult to predict the future, it's clear that some markets will be impacted more than others, and this could present an opportunity for savvy real estate investors to pick up properties at a discount. In addition to real estate, there are other investment opportunities that could arise during a recession. For example, bonds and other fixed-income securities typically do well during economic downturns as investors flock to safer investments. Commodities like gold and silver also tend to perform well during uncertain economic times. However, it's important to note that investing during a recession can also be risky, and it's not a guarantee of success. It's essential to do your research and understand the risks before making any investment decisions. Working with a financial advisor or professional can also help you navigate the market and make informed decisions. Overall, while recessions can be a challenging time for many, they can also present unique opportunities for those who are prepared and informed. By understanding the market and potential investment opportunities, it's possible to build wealth even during difficult economic times. Thanks for tuning in to Invest Ideas, where we bring you the latest insights and strategies to help you make informed investment decisions. Don't forget to hit the subscribe button and stay ahead of the game. Please note that this information is for educational purposes only and should not be construed as financial advice. It is important to do your own research and consult with a financial advisor before making any investment decisions. Until next time, happy investing.